There's something really interesting going on with Quant right now. We are in a rally. Quant is the top performing cryptocurrency among the top 100 in terms of market cap. We are looking at a gain of 65% in the last 7 days. And this is all happening while we can't find any specific news around Quant. So how is it possible that we are gaining that much when nothing fundamental is going on? And this is not just Quant being positive in an overall bullish market, right? We all know how Bitcoin and Ethereum is rather going now sideways. But when we look at Quant relative to Ethereum and Quant relative to Bitcoin, those two charts, we see the outperformance is massive. This is an outperformance of 170%, more than that, versus Bitcoin, and 184% versus Ethereum. Now, a premium member asked about Quant already on Sunday. So he asked about a backtest for the FTX token and for Quant. And so the following day, I have made that backtest. Now, what am I talking about? I'm talking about these squiggly lines that you can see next to the price. So those are moving averages, simple and exponential, together with some buffer. And we follow that kind of a strategy using that kind of indicator for quite a few different cryptocurrencies. So we simulate buying and selling, trying to find out the best moving averages. I will explain this in more detail in a few minutes. And we've got an overview of all of those best moving averages for various assets in the premium membership. Now let's dive into the results. And let's dive into that buying and selling simulation for Quant to then get an approach, how to time this rally, how long we can ride this wave potentially. Now, the fundamental idea is simple. The fundamental idea is that we want to be in the market when momentum is bullish, and we want to be outside of the market when momentum is bearish. And so when the price is above the moving average, we want to be following the price. We want to be in the market. We want to be long. And when the price is below the moving average, we want to be short. We want to be betting on falling prices. Okay, so that's a fundamental idea. So we've got one moving average over here. The question then is though, what's a duration of a moving average that makes sense? Right? Should we take maybe the 14-day moving average and go in and out relatively quickly? Should we be more conservative, take the 20-day, or even more conservative, take the 40-day? What is the best duration for a moving average? And then should we take a simple moving average as drawn over here, or an exponential moving average that focuses more on the recent price movements? So those are all questions that are not obvious to answer, and that's why we need to have a backtest here, and we need to make this specific to each individual altcoin. And so I've run that backtest with this macro Excel sheet. So it starts in February of 2021 all the way to today. And the parameters we have over here is an initial capital of 10,000 US, a trading fee of 0.1%. That's Binance's non-discount trading fee. And we decide to bet on rising prices when the price is above the moving average, and bet on falling prices when the price is below. And so when we click on this button, iterate over the simple and exponential moving average, these fields here get automatically populated. I've already done this. I'm not running this now because my computer is a bit slow. When recording this will take like a minute or so to populate. So I don't want to bore you with that. But that's then what happens, right? It simulates all of this trading, and it gives then the annualized performance based on the duration of the moving average. So when we look at this in chart form, this is what we get. So on the x-axis, we've got the duration of the moving average. So say a 2-day moving average or a 52-day moving average. One simply just means we look at yesterday's price. And on the y-axis, we've got the annualized performance. How much performance per annum would we get if we buy when the price is above, and if we bet on falling prices when the price is below the moving average, based on those different moving average durations over here. And in black, we see the buying and hold line. How much would we have gotten if we just bought and held over the time period? And so we can see there are a few interesting points here, right? We see the 9-day simple moving average. We see the 52-day simple moving average, so we could plot both of those. 52 is this one over here. 9 is this one over here. And so historically, those worked relatively well. Currently, we are above both of them. So that's the green line here. And then we could also plot an exponential moving average. For example, this one here, the 38-day exponential. So what you do in TradingView is you click on indicators, you search for moving average exponential. Let's change the styling to red and a bit more thick. And then let's change the length to 38 days. So those are the moving averages that historically work the best, how we can ideally time Quant. Now there's a bit more data over here. I've also calculated various buffers, etc. I don't want to get into those details for now, but simply this is how that looks like in the end, right? If the Quant price tends to go down, then we tend to appreciate. During a sideways trading range though, we might not be outperforming. So be aware of this. We need to have some kind of a clear direction. So when we have something like this, right, a sideways trading range, like at the beginning here, we tend to just buy high and sell low and buy high and sell low. We get a lot of failed signals. So this is why we can't really 100% automate this, right? We still have to make our own TA. We still have to identify those sideways trading ranges and not just continue to buy when there's no clear breakout yet. That being said, this clear breakout definitely now happened. So the way we can use this information is to simply set trailing stop losses, right? So what's a trailing stop loss? It's an automatic sale at a certain price, and we increase that price as the moving averages go up. So one approach could potentially be to stagger the sale, right? We do a trailing stop loss and we sell the first third when we cross the first moving average, the second third when we cross the second moving average, and the third third with the last moving average. Now, all of this is obviously very risky in this environment, and that's why we have these stop losses. We want to protect ourselves from potential losses because the overall market, it doesn't look as great. So we could potentially break out after a while, right? If we are lucky. But right now in Bitcoin, we are below the beta of the longer term simple moving averages. We are hovering in a sideways trading range. So overall, Bitcoin and crypto in general doesn't look as bullish, meaning there is some kind of downwards pressure potentially that could weigh this down. So we have to limit our risk. The volatility in Quant is obviously also very, very massive, right? This is a 90% drop here. I am rather risk off in this current environment. I try to not time any altcoin moves, but if you're rather a short-term trader and you're currently interested in getting into Quant, I definitely take those moving averages at least as one more tool in your toolbox to see potential resistances and supports, to see potential dangers that might happen, that might materialize in case we go again below those moving averages. So nobody can, of course, predict the future, but that's why we try to use data to come up with a somewhat sensible approach. Backtesting, in my opinion, is a valid tool for that. Relative evaluations, of course, is another one. So versus Ethereum, the potential additional outperformance at this point in time where Quant is at $107 is a bit under 40%. And versus Bitcoin, it's roughly 70%. So don't try to ride this wave forever, right? Take your profits as we go up and limit your downside. This is one breakout in a market that's overall not necessarily positive. So make sure to not burn yourself and to really just risk what you can afford to lose, to do proper risk management. Please give this video a like to help the channel grow. And in case you haven't subscribed yet, don't forget to do so. I publish videos regularly. Last but not least, there's a public Telegram group. Simply search for Bitcoin Strategy Channel within the Telegram app. There's another video discussing the current state of the bear market. Hope to see you in that video, and thanks for watching this one. Bye-bye.